It's called the block trade indicator on your charts. So that up here is we've got, of course, our market, and then we've got a modified stochastic here. Now, in the bottom panel, I have these histogram lines, as you can see. This is volume down here. That's volume. Now, you may note that, wait a minute, how come there are not volume bars underneath each one of the price bars? That's because these volume bars are measuring only the smart money. So we're not looking for the dumb money. We want to trade with the smart money, obviously. So this is one way that we do it. We can pull up a time and sales window. So that's what's over here on the right. Fourth column, this is the key now. You'll see the size of each order. So each row is an order, an independent order. Now, I've filtered again out all of the orders that are less than 20 contracts. This is the NASDAQ 100 futures. So now, how do you determine what size? So I want to only see when people who are trading relative size are trading. When are they coming in? And that will plot the volume on the bottom of my chart. Now, how do you determine what size? Okay, what I want to ask myself is this very simple question. An amateur trader, your average amateur trader, someone who is losing money, unfortunately, how much are they trading? What kind of size are they trading? Now, they might trade one contract, maybe two, three, maybe four, perhaps 20, not so likely. Now, what I like is I like to then transfer that over to the chart. Now, if you can't transfer it over to the chart, another thing that you could do is you could simply create audio alerts so that when an order of a certain size, magnitude, goes through the market, you get an audio alert. And that way you don't have to be eyeballing two windows back and forth. So here we go. Okay, and now it'll also show you the relative size. So here we get some larger orders coming in. And where do they come in? They come in right at the bottom of the market. And that's one of the common things you'll note. Look for these in two places. Number one, cycle highs and cycle lows. And number two, breakouts. Breakouts through support resistance. So for those of you who are breakout traders and you're getting a lot of false breakouts, adding this to your charting software can dramatically help increase the number of real breakouts you get and help you avoid false breakouts. Because if a breakout isn't accompanied by professional traders, it's probably not going to follow through. For two reasons. Number one, the smart money is not trading it, so it's probably not a smart idea, and it's not a good trade. Number two is because the professional volume in and of itself helps to create that momentum to sustain the movement. So we get the big movements down here. Okay. Now, and then let's look over here. Here we get a cycle high. Oops, there we go. And okay, we get a little professional volume coming in here at the cycle high. Then we get accumulation pattern in here. And this is one of our trades. We call that a second retrace in the trend trade. You notice I've got my wave counts on there. That's automated. I do have software for that, by the way, if you're interested in that. And then, again, notice the relative size. That's important as well. Just because one professional or semi-professional trader comes in and trades doesn't necessarily mean it's going to be a winner. Hey, professional traders have losers too, right? I lose sometimes. Not all my trades are winners. So again, this is not going to be 100%. But look for a preponderance of the evidence. Wait a minute, we're getting quite a few professionals coming in, and now we got a lot of them coming in. A lot of big trades coming in. So, and where's it coming in? It's coming in right at that cycle low. Here's your cycle low. By the way, if you're interested in that cycle indicator, I can give that to you. Just send me an email at barry@topdogtrading.com, and I'll tell you how to get that. I've got a webinar that we offer and teach you how to trade it, as well as give you the indicator. And then we're retracing to support, and we're putting in a wave low. Second retrace in the trend, wave 4. And this is a super high confirmation then. Then we're saying, okay, we've got several things. We've got the price pattern, second retrace in a trend. Trend is up. We've got support. That's the 15 EMA, by the way, the black line. We've got a cycle low. We've got professional volume. See, again, preponderance of the evidence. And we also have a nice 2-bar candlestick pattern there. So if you like this video and you're watching it on YouTube, please click the little thumbs up icon below. And hey, also leave a comment. I love it when people leave comments. That encourages me to create more free tutorials for you. I'm also giving away one of my favorite trade strategies. It's called the rubber band trade. It has a very, very high win-loss ratio. And it's a simple strategy you can learn in about 26 short minutes. So get the video explaining that trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with the circle around it in the top right corner of this video. And once you do that, I will personally email the video to you.